So a trading career is based on 5 pillars. The first 6 months, you are an unconscious and incompetent trader. Yeah. So you don't have any idea, and you think that everything is great. The next 6 months, you are conscious but still an incompetent trader. So you're conscious that you don't know it. So you look for the developments. The remaining 1 to 3 years is your pivotal point. It's like you get to understand that that eureka moment, you know, that I need to develop something. And after the 3 year, you become you get to enter into a professional level, and the remaining after the 5th year is basically the time that that you become unconscious competent trader, which means is that you do things already unconsciously because it became as a habit, and that's what I want you to get to the level for. Okay. Today's webinar is delivered to one of the new A to Z approved brokers. It's called Super Trading Online. It's a broker that is regulated by 3 regulators: FCA, SISEC, and CONSOB. If you ask what's CONSOB, it's the Italian regulator. FCA is UK, and SISEC is from Cyprus. And we will be looking into mostly 4 tradable instruments for today, and I'll be starting with euro dollar, and then we'll go through your questions and answers towards the end of the webinar. So let's go back and take a look at the market overall. If you go on weekly time frame, you will see this trend line over here that I had drawn before. It is acting strong, and it has been generally a pivotal level, and you can see it over here. Whenever it touched to the trend line, the market went into a sideways consolidation move because it was a weekly trend line. So far, the market has broken below this trend line. Now the question is, are we now up for another bearish run to 1.00, as some of the banks are claiming? My answer would be hell no. I don't expect the 1.00 yet. But what is the target? That's the next question. So as you know, I always follow the Fibonacci. So going back to the Fibonacci, we can see that 61.8% Fibonacci retracement zone has acted strong. So we have that level as a buy level. And if you buy at this level, it's basically 1.0845 level, 40 level. If you are buying at that level, use just 15 pips or so stop loss, preferably around 25 pips, something like this. And your targets should remain initially to the level of 1.0915 level, and if that level is broken, the remaining part will be 1.0975 level, and then last but not least, we are going to be looking for 1.1040 level. So what's the significance of these levels? 1.0920 level falls onto 76.4% Fibonacci retracement zone. But the most important level that we are looking for right now is 1.0980 level, and that is the 88% Fibonacci retracement zone. I know you don't have these levels on your chart, on your Fibonacci, but these are custom levels, and it's pretty easy to add them. All you need is you just draw a Fibonacci line, and then double click on the line, right click on it, go to Fibonacci properties, and you can press add, and you will add it. If you want to add if you want to add 88% Fibonacci retracement zone, all you need is you type 0.88, and then on the description part you type 88, and if you want to see the price next to it, you type percentage and dollar mark, and there you go. This is your Fibonacci. So what is next? I'm convinced that unless the current lowest low of 1.0840 level is broken, we are going to be looking for a temporary correction wave, and the temporary correction wave should be minimalistically towards 1.0915 level. However, though, if 1.0840 level is broken, we are going to be looking for 1.0770 level, which has been a major support level for a really long time, almost a year now. And main buy levels for everyone, if you want to put a pending buy limit order, should be at 1.0715 level. Place it and forget it. So just place it at 1.0715 and you can forget about it for a while. Whenever it touches, we will, well, 95% probability that we will be having at least 100 pips profit on that entry. So that's the outlook for euro dollar. Let's move on to gold, that amazing instrument. Nothing has so far changed on gold. I have been expecting the valuable metal to break above or below the triangle formation that we have over here. And the preferences are on the bullish side, that the triangle will be broken on from the top side. And if you go on hourly time frame, we can see that, well, most of the indicators are anyway supporting the bullishness, except the MACD. So on hourly time frame, we have the two moving averages, both showing upwards, 50 and 200 hour moving averages. And MACD over here is showing possible bullishness as well. But the fact that MACD bars are below the zero line basically tells us that watch out, there is a chance that I might actually go bearish. And the next signal bearishness that we have is the fact that prices being, despite the moving averages showing upwards, the price are below the moving averages, which is also another bearish signal. So what do we do in this case? My suggestion would be to basically look for a breakout, or in another word, you can also look for a correction wave towards southwards, a move of 1,206 level, and then from there onwards, once again, long towards 1,246. So what entries have we been hosting so far? On Friday's analysis we said that we will be shorting gold from 1,241 to 1,251 level, basically from this level to 1,222. So far, we are just $4, $5 short of 1,222 level. So once it's done over here, we will be stopping to short gold, and if we see the gold hitting the 1,206 level, we will start buying. Or in another word, if we see that gold is going to be breaking above the 1,248, 1,249 level, we will also be buying. This is for gold. Moving on to GBP Canadian dollar, this is a new tradable instrument that I'm going to be looking for. It's a perfect example of a perfect Fibonacci wave on weekly time frame, and you can see how amazing this tool is, how significant 50% has worked, how significant 200% has worked, and how significant it is at 38.2%, despite the fact that our wave was in 2015. So what is it that we could expect from this instrument? First of all, 38.2% is a major support level, and that's basically the lowest low of yesterday. It's at 1.8690 level, more or less. 86.74 level. It was the lowest low for yesterday. And what else can we expect from this pair for us to be able to take advantage of it? First thing first, we see that the market is trying to move above the 50-hour moving average. And there is despite the market was making a lower low, we have seen that the MACD over here is making a divergence, which is a sign of a potential bullish movement. So what can we do? That's the golden question. First thing first, you have to understand that whenever the market makes a divergence like that, and you see that the pair moves to 50-hour moving average, the next move is not going to be a penetration above, but it will be a penetration below, or reversal actually. So we will be looking for the market to make another low, and then we will be looking for long in the GBP Canadian dollar. What can be our target? Well, let's take a look at it a little more closely over here. And you will see that the current level is on intraday time frame, 50% Fibonacci retracement. And from 50, we can expect the 110 to be achieved. So 110 falls onto 1.8649 level. We could aim to long or put a buy limit order at 1.8649, 1.8652 level, and from there onwards we will be aiming to go for minimum of 170 pips bullish Y, and that's towards 1.8830 level. And if that level is anyway broken above, we will be looking for an overall development towards 1.90 level, which is 61.80 or 61.8% Fibonacci retracement zone, and that falls onto 1.9025 on GBP Canadian dollar. The final instrument that we will be looking for today is the Japanese yen. If we look into Japanese yen, we can see that 100% Fibonacci retracement zone so far acted as a strong level in the last couple of days, and that was at 1.11. If you remember, in our previous week's sessions with Adamos, we were discussing that the market is likely to touch the 1.1111 level or 111.11 level, and from there onwards we were looking for bullish development. So since the market is breaking above the next resistance level, which is 114 level, we are once again looking for another bullish development, and that's 114.90 level, which is 61.8% Fibonacci retracement zone. So we will be aiming for this level for now. If you are long in it, keep on long in it until 114.90 level. And if you see that 115.15 level is broken above, then you can keep on long further, and your further bullish target will remain at 116.60 level. From there onwards, though, 116.50 level. From there onwards, though, we will be looking for short opportunities once again, for the fact that the world economy is not really doing well. Once again, today's webinar was delivered to you by Super Trading Online. And I want to also share one thing about Super Trading Online, that they have just recently announced a new campaign yesterday. And it's 10% interest rate promotion. Basically what they do is that if you have funds on Super Trading Online, you will be getting 10% interest on your funds on annual basis. So if you put basically $1,000 there, even if you don't trade, it will become $1,100 at the end of the year. I think it's better than the bank anyway. Thank you very much for your time. This webinar was once again delivered by myself, Yagub Rahimov, in association with Super Trading Online and A to Z Forex. If you have any question, feel free to write. Yesterday, when I was visiting, when I came to Cyprus, I had a meeting in Nicosia, which is capital of Cyprus. And afterwards, I met with one of my informal trainees, whom I have been meeting every now and then for the last two months for 30 minutes sessions. When I met him for the first time, he pretty much didn't have any clue about the market, and he was mostly a loser trader because obviously he didn't have any clue about the market. And I teach him the very same strategy that you see on my screen right now, 2 moving averages and MACD. And yesterday's performance that he showed me was more than 60% profitability, but he's still struggling with his psychology as well. And this is what I told him yesterday. We are all human. So when we are born to life, we don't know which direction we need to take. I guess all of us would agree with it. So we follow our parents, whom has the experience from the previous experiences that they can guide us to the life. I guess all of you would agree with me. And the market is exactly the same. So each candle born doesn't know where to go. It's the market. It's your life. It's the life, yeah? But if you look at the moving averages, basically it takes into account the previous X amount of time frame and gives you the average or the direction of the market. You get to follow the trend then. So as long as you can manage to follow the market based on the moving averages, you will not end up, going against the trend. And as long as you do it right, you will not be punished. Just like, we are all human. If we were doing something wrong when we were a child, our parents would sometimes punish us. So try to focus mostly on moving averages. Don't use any other irrelevant indicator. As you can see, I only have moving average on my chart. MACD is also a moving average. And look at the direction of it. If it is showing up, it means the market is up. If it is showing down, the market is down. And everything is as simple as that. So follow the parent of the market, which are the moving averages.